What's going on, guys? Welcome back to another video. In this video, I've got something slightly different for you guys for this weekend. So you guys have seen the success that I've been having with this 1348 EMA crossover strategy. All the people in my live chats, TMI's live chats, Gabe's videos, the Discord, and Gabe's live chats. A lot of people are finding a lot of success with this strategy. And because of that, you guys have been asking for a standalone video, just kind of going a little bit further, breaking down this strategy, just kind of making it simple for everybody to understand, or more simple and understandable, so you can get a little bit of a different viewpoint on this strategy. So what we're going to be covering in this video is we're going to be going over why this strategy is the most profitable EMA crossover strategy, a little bit of a sneak peek into the Discord and exactly what you guys are getting over there and how to use these alerts. But the most important part is going to be some of the tips and tricks that I have found and implemented with success with this strategy that I want to share with you guys. Now, we've talked about some of these on the live streams in the past, but I want to make sure you guys fully understand this in a video format. Now, we're going to be talking a lot about exit strategies too, because I think the entry strategies, I think it's pretty simple. We get those 1348 crossovers above or below the 200 EMA, enter and kind of see where it goes. But the exit strategy is, I think, where a lot of people are really kind of not finding issues, but just trying to figure out when to exit a position. Now, the make it free strategy is going to be towards the end of this video, which I think a lot of you guys have shown a lot of interest in, and it's something that I've been using over this last week with a lot of success. So make sure you guys stay tuned until the end just to kind of see how I am kind of using this to kind of guarantee myself profit and also have contracts that are going to serve as runners. So before we get into all of this information, make sure you guys hit that like button on the video if you have been finding success with this strategy. And if you do have any more questions about this strategy, make sure you guys leave a comment down below and I will be answering any and all comments and questions that I can feasibly get to. So the first thing that we really need to go over is, what is the 1348 EMA? Well, this study right here determined the best moving average crossover trading strategy. So when we take a look at the details of this, you can kind of see here that the 50 and 200-day SMAs are conventionally used in determining crossovers, but are they the best averages to trade? ETF HQ tested a massive number of combinations of moving averages to determine which two averages generated the highest crossover trading returns. They used a total of 300 years worth of daily and weekly data from 16 different global indices to determine which two moving averages would have produced the largest gains for crossover trades. And guess what it is? 1348. So there's a lot of data backing up this strategy. So what we do to kind of make this easier for you guys is, well, if on my Webull chart here, I can show you guys, you can come over here, you can grid it out, you can look at 4 charts over here if you want to, but you're not going to be able to kind of see all of the crossovers happening across the market. That's why we have this alert system over here where we can see we also do 920. We have 3-minute SPY alerts, 3-minute market alerts on about 350 stocks. We have the 4-hour alerts as well on those same stocks, 30-minute alerts, 15-minute crypto alerts, and the cheap daily crosses for those of you guys who can't necessarily trade options. So they come through like this. There's a live chart right here. There's kind of some notes on what the price is, kind of where you would want to buy these contracts if you were trading it. And the charts are live. So you click on the charts, you can see exactly what's going to go on and kind of use what Gabe has set up with his charts. So this is something that I really want you guys to understand because I think there's a big misconception that we are going to get into a little bit later, that a lot of these Discords are kind of coming out and saying, well, this is what I'm buying, this is what I'm selling. That's not what we're doing at all here. We are teaching you guys a strategy and then giving you guys a tool to make it much easier for you to implement the strategy and find those super profitable crossovers. Now, coming over to this Google Doc that I've kind of made for you guys over here, there's a couple of things that we really need to get into first. This strategy is not at all to be treated as a get-rich-quick YOLO strategy. You will lose. I think a lot of times in the kind of finance community and content creation, you see a lot of people kind of flexing gains, showing off their watches, showing off their cars, and you really don't get an insight into what their exactly trading strategy is. You're not seeing exactly what they're doing. And I think that's where a lot of problem comes in because a lot of people are selling hope. Now, TMI brought up a really, really good point in the private live streams that we do for the Discord last weekend. And it was really the numbers that you really should be aiming for every single day in terms of profit in order to really set yourself up on the right foot. So when we come over here, this is going to be the daily compound interest calculator. We're starting with $10,000. That might be an unreasonable amount for you, either too high or way too low, but that's just the number that we're going to be focusing in on here. The key thing to look for is these percentage gains. So 267.6%. Well, how much do you need to generate every single day compounded in order to get this return? 0.5%. That 0.5% number is going to come in a little bit later when we talk about how to make these contracts free. But just keep this in mind. With $10,000 after a year of trading, you're at about $36,000, but then the next year, $135,000. This isn't necessarily to come in here and tell you guys that, oh my God, if you start trading this way, you're gonna make $135,000 in 2 years. That's not what it is at all. It's just trying to show you guys you don't need to be swinging for those home run 500%, 1,000% plays. The base hits are going to get you there, and the name of the game in trading is going to be consistency. So when we come down a little bit further here, the rules of the game, just basic 1348 in trading strategy, a maximum of 10% of the account value in a position in a given trade, meaning that if you have a $1,000 portfolio, you're only putting $100 into any trade. 15 to 20% stop loss, meaning that you're essentially risking 1.5 to 2% of your overall portfolio on any given trade. I think this is something that a lot of people are struggling with right now, the stop loss situation. I've been talking to a couple of people that maybe they're entering into a trade, they're leaving because they can't necessarily watch the market all day long, and then boom, randomly, they're either up a boatload 200, 300%, or they're down a significant amount. You need to have these stop losses in there to protect yourself. And what we're looking at here is kind of some emotional aspects of trading and psychological aspects of trading as well. You see a position losing, cut it. We are alerting where you're seeing those 1348 crossover alerts on all those different time frames. You're getting hundreds of alerts every single day. You just need to be able to pick the ones that look really good for you. And we're going to go over how to do that a little bit here as well. But you really need to treat yourself like a bot, like an emotionless algorithm that's just going through the market, abiding by all of the rules that you have set out for yourself. So the basic strategy outline, all you're going to need on your chart really just for the basics is the 13 EMA, the 48 EMA, and the 200 EMA. Now, this is if you're using your own charts, but if you are in the Discord right now and you are trying to use those charts that we are sending out to you guys, they are live charts. All you have to do is click on them and you can watch the live price action with the charts that we have set up for you after the alerts happen. You can also have the RSI, looking at if the RSI is above 50, below 50, the MACD, or the shaft trend cycle on TradingView as well. And those do help you kind of trying to determine whether or not to stay in a position or to get out of a position. But the most important things that I really want to go over in this update are some of the things that surrounding the entry strategy and the exit strategy. So just kind of an example of a 1348 trade right here. We're looking at the SPY on Friday. So the SPY on Friday, we kind of know it was kind of nuts out of the gate. We saw some pretty solid candles. You see this 1348 crossover here. Again, 13, the blue line crosses above the 48, the red line right here, and we are above this yellow line, the 200 EMA. Now you're going to see a green line here too. That's just kind of me messing around. It's the 200 or the 25 MA, the normal moving average. It just kind of serves as a buffer most of the time between this 13 and the 48. You do see price action respect this 25 MA on a lot of different time frames as well. That's just kind of why I have it on there. You don't need it, but for me, it's a little bit helpful. So you see this trade right here. You see the crossover. You see these couple of candles right here, some confirmation candles. You can ride the stock if you're trading options from 437 all the way up to a height over here of what is this? 440. That's a $3 move in the SPY on a daily expiration. You're going to do pretty well with that trade. Now, here's kind of where we get into some exit strategy talk here. So we see the SPY goes on a pretty significant moon mission throughout the end of the day. But we also see that if SPY tries to get out of this supply and demand zone here, but gets knocked right back down to this 13 EMA over here. So there's a couple of different exit strategies that I want you guys to kind of keep in mind. And you kind of also, I use a variety of different indicators to kind of confirm or deny my entries or exits as well. You guys see me on the live streams. I'm looking through different time frames. I'm looking at different indicators to get the best overall picture of the market that I possibly can at that given time. So the first Actually, let's talk about these entry strategies. So a lot of people are having trouble with these shark fins. So the stock runs up, it comes right back down. So it's going to happen to you sometimes, and you are going to get stopped out of positions. We are all going to take losses. That's just the name of the game over here. We're all going to lose on some trades. But in order to avoid getting stopped out on some of these shark fins, I've seen a lot of people say, well, I enter into the trade on a 1348 cross. It starts to run up, it comes back down, I get stopped out, and then it starts to run significantly. Well, one of the ways to kind of avoid that is to buy closer to the money or deeper in the money contracts. You're going to limit your max gain a little bit here, but we're not swinging for the fences. We're trying to trade safely, consistently, to slowly stack up that cash balance. The other thing is that new day high, new day low strategy that I've kind of been talking about a lot. Going off of that supply and demand conversation, what those boxes essentially are where big institutional money and big money is flowing in and kind of battling and trying to figure out where they're willing to transact. If we break above those levels, awesome. We're going to see some price action to the upside if the bulls can kind of control the price and kind of take control of the day. Same thing with the downside. The new day high, new day low strategy is kind of the same thing. I look for stocks that are kind of breaking that new day high or new day low with those 1348 crossovers, because if the stocks are kind of ripping in the morning, going all over the place or jumping up and down, and then they start to consolidate, well, you're going to see a decent amount of those 1348 crossovers, but maybe they're just hovering right around that 200 EMA, and you're not going to get that big move that's going to get you that 10, 20, 30, 40% gain that we need to make it free on that strategy that we're going to talk about a little bit later. Again, with morning trading, you kind of see a lot of volatility in the morning just because there's a lot of orders sitting out there. I found, for me personally, entering into day trades in the morning is the most profitable. It does come with a little bit more risk, and you do have to pay attention to it a little bit more, but the bigger moves are typically going to happen within the first hour and a half, 2 hours of the market, and then things start to settle down. That's just me personally. If you have a time during the day where you're more successful and consistently more successful, then just stick with that. But this is kind of what I look for. And then for exit strategies. So exit strategies are not as simple, in my opinion, as entry strategies. Just because they're a little bit more subjective. A lot of you guys are going to have different risk tolerances, different goals. But at the end of the day, we want you guys to be very, very consistent and on the same page. So the first one is going to be a closing candle above or below the 13 EMA on the 5-minute. Now, it's above or below depending on if you're trading calls or puts. If you're trading puts, a closing candle above the 13. If you're trading calls, a 13 or a closing candle below the 13 EMA. So when we look at the SPY over here, it's kind of hard to determine whether or not we're getting these closing candles that are staying below this 13 EMA right here. It doesn't really look like we are on the 5-minute chart. This is where taking a look at a couple of other different time frames are going to give you a better picture of the overall market. Thinking about this supply and demand zone situation right here, if we flip this to the 1-minute chart right here and come over to the SPY, what do we see? Well, we know that the buyers were trying to push it out of this zone here. We got that 1-minute 1348 cross. We also have the 5-minute just after the opening bell. And then we start to come back down after we break out of this box. But what do we see here? It comes down into this box, closing candle below the 13 EMA, and this price is at about 439.64, right around there. But you were entering on the 5-minute chart in the 437s. You are in profit by a decent amount, especially if you are trading those daily expiration contracts. With the dailies, they're going to be a little bit more risky. But again, it doesn't mean that you cannot reestablish your position if you use a variety of other indicators to get back in. So if you flip back and forth between the 5 and the 1-minute and you look at those breaks above or below of the 13 EMA on that 1-minute chart, it's going to take you out a little bit earlier of the trade. That's just what's going to happen. If you do want to stay in a little bit longer, that's kind of where this shaft trend cycle comes in. I kind of view this as a little bit of a better MACD. When we're looking at the SPY right here on the 5-minute, we can see that the shaft trend cycle was in a buy signal all the way up until 1035. When we look at the chart of the SPY on Friday, where's 1035 on this 5-minute chart right here? Well, it's right around this second, where is this? It's right around here. So you see this break up, you see it come down, kind of consolidate right here, and you're seeing the shaft trend cycle start to flip to sell. then it starts to sell off. Now, you can also use that indicator to try to see when you want to get back into a trade. But again, after you see that 1348 cross, we're trading actionable crosses here, guys, meaning that you want to see a cross happen before your eyes. That keeps you really, really consistent in your trading. And really, again, it makes you kind of like a robot in trying to kind of establish and get out of these positions in the most efficient way that you can. Now, this next kind of exit strategy, this one is my favorite, the make it free strategy. And this is one that I want a lot of people to really start to pay attention to. Now, with this make it free strategy, you still have to be aware of the exit strategies above and what's going on with the overall market context, the news happening during the day, especially if you're trading single stocks like a Micron or an Affirm that we like to do all the time. You do have to be aware of what the overall indexes are doing, the SPY, QQQ, what are they saying about where the market is headed? And let's see if the stocks that you're trading are going to follow that trend as well. If not, you might have to use one of these strategies up here. But here's kind of how this make it free strategy works. It kind of follows the math along with this. So the first example is going to be the blocks of 4. This is kind of what I've been trying to get across to a lot of people on the live streams. The blocks of 4 example, you buy 4 contracts. They're 25 cents each, meaning that you're paying $25 each contract because one options contract controls basically 100 shares. You multiply every price that you see on the options chain by 100, and that's what you're exactly paying. The purchase price of this position is $100. So this is going off if you were just trading in a $1,000 account. Let's say the position goes up 40%, which I think a lot of people do see, especially if you're trading some of these weekly expirations or the daily expirations, especially with the SPY. So now the position value is worth $140 and each contract costs 35 cents versus the 25 cents that they cost before. Now, by selling out of 3 of the 4 contracts, so 35 times 3, you collect back $105. So you've guaranteed yourself 5% of 10% of your portfolio. That's actually that 0.5% that we needed from that compound interest calculator before. And now you have a free contract. But even if that free contract goes to 0, you've guaranteed yourself 0.5% for that trade. You could be completely done for the day at that point, even if that freebie expires worthless. Now, this applies to any multiple of 4. So let's say you buy 8, you would then sell 6 after the position would go up about 40%. You still make that 5% and have free contracts. Now, I've been messing with this a little bit because everybody's going to have basically different amounts of money that they can play with. If you're trading a lower price stock, but you have a lot more money, you can get more contracts. If you're trading a higher price stock, it's going to be harder to get your hands on more contracts if you don't have a medium to large size portfolio and you're following the rules. But for 5 contracts, let's just say those 5 contracts cost 20 cents each. The position value again is $100. The position goes up by 35%. The total value is now $135. The contracts are now worth 27 versus being worth 0.2 before. Now, by selling 4 contracts, you collect $108 versus the 100 that you put into the trade. So you make 8% or 0.8% of your total portfolio, and you now have a free contract again. So this is kind of the exit strategy that I've been using to kind of guarantee my profit and have some runners, because you guys have seen on the stream sometimes, especially on Fridays, like the Affirm trade was up 450% at one point. I don't need, or not necessarily need, but I don't want to be kind of witnessing those giant swings in my portfolio. I want to guarantee those base hits and leave some contracts there to run. That is the name of the game in this trading game. You want those base hits. You want to slowly stack up your cash balance because as we saw with that daily compound interest calculator before, that 0.5% means a whole lot over the long term. So guys, the main ideas with this video right here was just kind of give you a little bit more insight into the strategy, some tips and tricks on what we're using for 1348. But at the end of the day, you need to be following the rules. The one thing that I've been saying in these private live streams is you can be the best trader in the world and you can be the best at picking the entries, but if you do not have proper risk management or a good exit strategy, you are going to struggle. That's kind of why I like to say that in what we teach in our Discord by showing the strategy and giving you guys the alerts and the tool to make it a lot easier to find these kind of trades that we're setting up. If you don't know why you're entering a trade, how are you going to know that why you're going to exit? You need to have that exit strategy, which is why we don't necessarily just post our trades in the Discord. We are taking some of these alerts, but it doesn't make any sense for us to tell you what we're doing and have you guys not necessarily know why. So that's kind of what we're looking at here. So if you guys have any more questions about the information that we covered in this video, make sure you drop it below in a comment. I'm going to be answering all of the questions that I possibly can. But other than that, guys, I hope you guys have a great weekend, and I will see you guys in the next video.